Crisis investing. People are always asking me where the outlook is good, but that's the wrong question. The right question is, where is the outlook most miserable? Sir John Templeton. Sir John Templeton made his reputation as a pioneer of global investing. After all, he spent a lifetime investing in foreign stock markets far off the screens of most U.S. investors. Templeton bought U.S. stocks even as German tanks came rolling into Poland in 1939. He gobbled up cheap German stocks in 1945 at the close of World War II. And he bet on the rebound in Japanese stocks during the 1950s and 1960s. Recently, I've realized that there's another way to look at John Templeton's investment success. By investing in markets where others fear to tread, Templeton was also a pioneer in crisis investing, a deeply contrarian approach to investing that has made savvy and patient investors great fortunes. Today, I want to discuss two ways you may be able to replicate John Templeton's success. Invest when stocks are down 90%. I earn my investment spurs investing in emerging markets. I've lived through crashes that most U.S. investors can scarcely imagine. For U.S. investors, the recent 30% drop in the U.S. stock market is a historical event. But for emerging markets investors, it's a typical pullback. I've mentioned before my experience in the Russian stock market crash in the late 1990s. In 1998, I was running several mutual funds that invested in Russia. Starting in 1996, Russia had experienced a massive stock market boom. Moscow became the go-to place for young people to make their fortunes. But in August of 1998, the Russian government defaulted on its debt. Many Russian blue chips collapsed by up to 98%. The collapse of Uber hedge fund long-term capital management, a massive investor in Russian debt, briefly brought the global financial system to the brink of collapse. Even super speculator George Soros lost $2 billion in the Russian stock market. Investors left in droves. Russia entered its version of the Great Depression. But those like Bill Browder of Hermitage Capital Management stuck with Russia and made hundreds of millions of dollars over the next 5 years. Let's look at the math of why investing in stocks at a massive discount can be so powerful. Say you buy a $2 stock whose value was once $100. You are buying that stock at a 98% discount. Suppose things get only slightly better and the stock moves up to a 90% discount. If you've bought the stock at $2, the stock is now trading at $10. You've already made 5 times your money. But here's the challenge for us today in the US market. Despite the COVID-19 crisis, very few US stocks have dropped by 90% or more. And that even includes stocks like cruise lines, airlines, and hotels. So keep an eye out for whether that changes, because that's where the greatest opportunities will lie. Another approach is to invest in small, neglected stocks. Sir John Templeton also observed that if you do the same things as other people, you'll get the same results. Investors, analysts, and pundits are all focused on the same group of stocks. Yet to generate different and better results, you need to focus on opportunities others ignore. The investment firm Verdad recently examined which asset class generated the best returns over 8 financial crises since the 1970s. What was Verdad's conclusion? The best place to invest during a crisis to maximize your return is small cap value stocks. Verdad found that cheap value stocks outperform expensive growth stocks. Low volume stocks beat high volume stocks. Companies with positive cash flows trounced those with negative cash flows. Stocks that met Verdad's criteria outperformed the broader market by 2-fold over the coming 12 months and by 3-fold over the next 24 months. Now, these stocks weren't the high-flying stocks of the prior bull market. In fact, they were the opposite. Generally, they were stocks in cyclical industries that were often sold off in a panic. Now, no exchange-traded fund I know of replicates Verdad's strategy, but the First Trust Dow Jones Select Microcap Index Fund, ticker symbol FDM, is probably the closest. It tracks the performance of the Dow Jones Select Microcap Index, a group of 207 stocks with an average market cap of only $389 million. Let's look at the psychological challenges of crisis investing. The lesson here is clear. If you can keep your head while everyone about you is losing theirs, you can exploit simple, predictable rules to make outsized returns. Still, there's no doubt that crisis investing is hard as heck. It's easy to say invest when there's blood in the streets. Crisis investing is less about identifying the opportunities, but more about having the psychological stamina to act upon them. On the one hand, all crises are similar. On the other hand, when you are in them, each crisis seems uniquely bad. You must always invest in the face of overwhelming negative sentiment. So, I can give you tried and true rules of crisis investing that helped make Sir John Templeton his fortune and his millions. And if you follow these rules, you can reap big rewards. The question is, will you?